Very good morning, everyone. Welcome to Admiral Markets. We're going to take a look at the Forex market, of course, together with this webinar, and look at the charts together. But first of all, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Thank you for your attention on that. As always, we're going to take a look at this rough trading plan, which is defining a trend, then looking for a particular opportunity. This could be a pullback, for example. Then we want to check any particular filters that might block the trade from materializing. Then we want to establish what kind of trigger we could use to establish if the market is confirming our analysis. And then last but not least, the entry after the triggers. Then we can decide which methods and tools we use to enter. For example, pullback, or is it the breakout, or is it the continuation, is it the bounce, and what method or tool we use to decide that. Most of the time I'll be using fibs, trend lines, moving averages. Let's take a look at what today's focus will be. I think it's just called intraday trading, but we'll check in a second. Let me just check my microphone settings. I hope that you can hear me properly. Thank you, Lau. Good morning. I'm not sure what you mean, Vigantas. Okay, thanks, Dan. Perfect. So most have good sound. That's good. Let's first take a look at the webinar schedule. You can do that by admiralmarkets.com. Then go click on Education and Webinars. And today is indeed intraday. Tomorrow we'll focus on Fibonacci. And tonight, Tarantula Nenet is going to talk about momentum in Forex trading. And tomorrow, together, we're going to take a look at scalping. Now, as you know, I'm not an expert in scalping. Tarantula is definitely a lot better in that, so make sure to watch that. Not because of me necessarily, but because of him, I would say. Let's take a quick look at the calendar. Well, nothing spectacular. We do have, of course, PPI later today, but during our session we have Spanish CPI, Swiss retail sales, and then after we finish, I think, Euro trade balance. So, but nothing major today. Let's take a look at our Euro. Well, the Euro, I eventually did buy it, but I got stopped out. I moved my stop loss to behind these fractals here. Let me open my drawing tool 1 second. Because the euro dollar clearly lacked the follow through. Why do I say clearly? It has to basically develop within a certain time frame. Otherwise, there's a certain weakness. There's no power in a particular move. And you can measure that with time. I've talked about that more often, I think. Maybe not sure to what extent everyone has heard it. But let me show you. This breakout, of course, was a breakout, but it turned into a false breakout, not necessarily because, well, obviously there was no follow-through, but how do we know that, right? How do we know here that there will be no follow-through? It's difficult to know. Only, of course, afterwards can we see it fell. Okay, then we can say there was no follow-through. But there is a way to know that here. Maybe, I don't know exactly, maybe some oscillators indicating that there was not enough strength here, etc. Those could be in the solution, obviously. But what I use is time factor. So if you look at the amount of time that we're hanging here above the trend line and not able to push above this, that's what I use. for example, we had here, if I look at the hourly chart, sorry for those green lines, this is still a supply-demand zone we had from yesterday's trading. Let me get rid of that 1 second, somehow. So back to the hourly. After this spike up, right, above this triangle, because this was the NFP spike, remember? Then we had this triangle, and then we had this spike, which could have been a continuation up to maybe the 272 target or the minus 618. But it didn't. So if you look at the time factor, once again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours, we can't break that top, right? Does anyone remember what rule I use for time factor? Does anyone remember? We had a webinar. If you're curious about time factor, we did have a webinar, by the way, a long time ago. In the meantime, I think it's about a year ago. Go to education webinars, go to video archive. The importance of time in your trading was actually the very first webinar I did with Admiral Markets. Does anyone remember what rule I use? Because we were talking about the euro-dollar break, and I said let it pull back halfway the candle and I'll be buyer. I did do that, but I exited for a small loss. Almost break even, I would say. Does anyone remember? Apparently not. Okay, no problem. I use 5 to 6 candles. So in this case, on an hourly chart, that's 5 to 6 hours, obviously. If you would trade a daily chart, that would be 5 to 6 daily candles, right? It's just 5 to 6 candles, so depending on the time frame. So if you have a 15-minute breakout, right? A breakout on a 50-minute chart, 5 to 6 candles basically means about 1.5 hours. And then that's the time I'm waiting, willing to be patient. After that, I'm getting a bit antsy because, I'm willing to be more rigorous in my trade management, more rigorous to take off the trade. Until then, I want to be patient because I know that time is on my side. What that basically means is that as soon as time isn't on your side, that means that if there's no energy to go up, then it's going to go the opposite way. So basically, when I saw 1, 2, 3, 4, 5, 6 candle not breaking this top, I already had an idea that this top was not going to break. I still trail stopped it because it did make a momentum up still. So I said, okay, I'll put my stop loss about here. If it breaks that level, then I want to be out because basically it will be breaking the triangle to the bottom side as well. So I normally actually take it off from break even if that happens, but this time I moved it to about here, 136.65. And after it broke that level, it did accelerate to the downside, and we got to move back to 136.25. Does that make sense? Does everyone follow that idea, or maybe it's totally new for you? Is it totally new? But that's how you can measure it, at least. Let me know if that makes sense. Otherwise, I can explain it in a bit more detail. But if you have doubts about the idea or you think that it might not have any value, I would challenge you to take a look at a chart and look in the past and use this idea. Of course, there will be exceptions, but it's a pretty good guideline. It's an extra piece of information. Interesting? No? Yes? No? No feedback so far, so I'm kind of curious. Okay, cool. Buren says it makes sense. But even if it doesn't make sense, let me know. I'm still curious. I wouldn't be offended. Don't worry. I got thick skin, so. So in any case, it broke to the downside, right? after that. And we could be back to support. But maybe, you know, it's a bit tricky because you can see that the candlesticks are right in all of these moving averages. So it's not an easy spot, I would say. I think we are at a bit of a bouncing spot. If we look at the 15-minute chart, we can see we made this fall. And we're kind of like making a bear flag, but it also could be like a first attempt to rebound again. So it's a bit of a no man's land, I would say. However, if a price were to break below this line, I would say I would have nothing against shorting it, personally. But not here, because we could be retracing it. This could be a strong retrace because the daily chart is still up. So this could be powerful. Then again, all the moving averages are red and are moving down. So I don't like this current situation where there's an uptrend maybe. So I wouldn't want to short it right here. What I would rather see is either a powerful upside and then wait for the next break to the upside, or I'd rather see the break to the downside here. Anything in between right in here is kind of like a neutral zone for me, and I'd rather stay out. So before I take it to the upside, I'd rather see some momentum to the upside and then take the next break above the moving averages. And I wouldn't mind to take it to the downside because all the moving averages are red. So for me, it would make sense to trade it. If it does break to the downside, it would make sense to trade it. You can see we stopped at the 50 fib, so the next target bouncing spot could be the 618. So there's not much space probably, but there could be some fall down to the 786, for example, and then we could see a bounce, not only off the 786, but also off a trend line at around 136. So that downside makes sense for today's intraday trading. The upside, I would be careful, as I said, only if we get a real good impulse, we get some small bear flag and then break again. So that's what I would be waiting for on the euro dollar. So let's zoom out again to the hourly. You can see we got some roundness already. We're rounding here a bit. So that's why I would really want a confirmation before shorting it, as I said, to short it there. This could just be a lot of chop down to the 50 fib. We can see we stopped at the 38.2. This could be a 50% bounce. Fib traders might have been actually jumping on a 50% buy here, for example. So let's move this trend line a bit like that. We'll probably have to break above these moving averages on the hourly and this trend line to have that breakout trade that we were thinking could happen yesterday, which didn't happen yesterday. And we could have that breakout trade maybe from 136.70 up to 137.20 finally. Later today, probably, not within our session probably. So that's about it. You can see trend line here, those are important lines, and this one. I don't think I really have anything to add. From a daily perspective, we are making good bullish candles here after a retrace down to the daily support. And obviously, a level like about here is very important resistance. So if we do break above 137, eventually 137.20, 137.60, then 138 will be the targets from this daily perspective. 138 will be the ultimate target because I would say there's a lot of resistance here, as you can see. A lot of confluence at that level. The downside, right, if there is a continuation down, you can see there is some space to move down. But then we bump into that daily support where we can bounce again. And this could be a hook back, basically a bounce, hook back for more upside. but doesn't necessarily mean there's not a good intraday short potential there, although the space from a daily perspective is small. If, of course, we make that downside today, let's say, and we bounce off that, and then tomorrow we start, slowly but surely breaking through it, well then we're not probably going to make that upside, and we're, apparently this downside was enough for us to keep pushing it forward to the downside. But that's of later, concern, not really important, I think, for today, but that could happen tomorrow or maybe Friday. That's something that we will discuss later on. But that's, of course, another scenario, that we don't bounce off of this trend line, but eventually break. And that's something we'll have to measure, how price responds to this trend line. Does it bounce up vividly, powerfully, or does it move like a bear flag and then start to break that bear flag? Well then, if it does that, it's more bearish than it's bearish and it's breaking a support line. So happy, so I got some more comments about the time thing from Lau and Sylvia. Great, happy to hear that. And if you ever have questions, for those of you who like this, find this interesting, by all means, let me know. And Björn is asking, can you start to trade as a scalp trade? And if it looks good, change it to a long. If it looks, I'm trying to figure scalp trade. If it looks good, change it to a long. So, okay. So what you mean is, take a potential small position as a long here, and then make it a bigger long position when it breaks, for example. Is that what you mean? That idea, yeah, it is risky, but it could have value, especially if you take a small risk here and then add something, scale in another one here. Thereby, what you're doing is risking small and adding risk only when it's going your way, and then you already have some buffer zone. So, yeah, it makes sense, that idea. It does. How much risk is difficult. You could say 0.3 here maybe, and 0.7 here, for example. Could be a suggestion, or 0.35 and 0.65, because this one is certainly riskier. But it does have the potential to use these initial higher highs and higher lows on the 15 to bounce again. The stop loss could be quite tight indeed. 10 pips could be enough, I guess. So that's an interesting idea. But it's of course, at the moment, it's a bit counter to 15 momentum, so that's why it's more risky. Well, at the moment, it's really getting close to this fractal. But there's a lot of momentum in this 5-minute bar as well. I'm just thinking, because I have a strategy based on these moving averages. I was just trying to calculate if I would still be in that sell trade or if I would be out. And my strategy rules would say that I would have the stop loss at 136.46. So I would still be in that short from here. I wasn't behind the charts, but I have a strategy that would have taken a short there and would have now the stop loss here. So I would still be in that short. But doesn't necessarily mean that, from a discretionary point of view, it could be definitely a bouncing spot, but a risky one. So for me, I rather wait for confirmation. So I don't like bounces that much. I also like waiting for trades a bit later in the day, generally speaking. I took a dollar CAD trade yesterday and a pound CAD trade. Let me show you. Besides the euro dollar. So what I did yesterday was this breakout right in here. Stop loss here. And I trail stopped the 15-minute fractals. So I exited just recently where I moved the stop loss to here. So that's the trade I took yesterday. Right there. I'm not sure yesterday what we were saying, 9:30, I forgot exactly. Yesterday price was still here. So anyhow, after that we got to move up, and it was a nice 3-touch trend line, and then it bounced down. Moving averages were all aligned, as you can see, after that as well. Here they were still kind of like mishy-mashy. Here they were nicely aligned. So that's why I like that break to the upside. Of course, it was an uptrend as well. So that looks good. In the meantime, we came pretty close to the 110 target. We didn't get there totally, but there's not much space left on that dollar CAD before we reach the minus 272 target. So that move up to me is, has finished. I wouldn't be looking for any dollar CAD anymore, personally. I'll show you the pound CAD quickly. Here too, there was a trend line. With the trend line, because look, it's easy to see the trend, right? Price is above the moving averages, and it made a bit bigger pullback to the green band here, bounced off the green band, and then started to make this, we could put this trend line on. So when it pushed through this top, I zoomed into the 15 and put the stop loss about, I think I used this fractal here, not this one. I want it to be below the moving averages. And I trail stopped that one too. So those are 3 trades I took yesterday. Two wins and 1 small loss. So that's a good trading day yesterday for me. Although actually these trades were closed today, in fact, because I trail stopped them. The dollar CAD. Basically for me, so that's the pound CAD, by the way, this one, and it seems to be reversing. Well, not reversing, but it seems to be retracing toward counter the trend. Of course, we stopped right at the top, which is a bit alarming, but we could still find a bounce here for more upside. I just would be on the sidelines for the moment. Regarding the dollar CAD, I am careful for the moment. We are in an uptrend. Obviously, this was if we look at this 4-hour chart, maybe it's the best. Let me zoom in a bit. Like this, we had a massive consolidation there. This was almost the entire December, in fact. But in January, of course, we had a very good breakout. But this breakout took the currency right to the minus 272 target there. Do you see that? So I'm a bit, when we get close to a big target like that, after a breakout, I'm getting more careful. Here there was still a lot of space to that target. Do you see? That zone there. That's why I was, felt very confident in taking that trade, that breakout, because there was space up to that bigger minus 272. Now we are closer to that minus 272, which means we could have a bigger consolidation zone. So I like it less currently. If you look at it from a daily perspective, what is that minus 272 target? I'll show you. It's a big minus 272 target. Actually it's a weekly minus 272 target. So maybe because it's a weekly, it could be because it's such a big target, maybe price could easily punch through it a bit. What is a 50 pip breakthrough that level is nothing on a weekly chart. Then again, 110, of course, is also a bit of a psychological number. And we got to 109, I think 70 or 75. that could already be respect for this level, in fact. So you can see this fib is based on this 786 minus 272 is the target. And it took long because we bounced off this 786 in the summer of 2012, so it took 1.5 years, slow but surely grind up to hit the target. And it was a nice uptrend, or is a nice uptrend channel on this dollar CAD like that. And you can see besides that, we could be at the top as well. Look, this is a channel that started in 2013. And we had upsides, then corrections, continuations to the upside, big corrections in fact here. And then upside continuation, and specifically the last parts here and here, of course, very strong. In its upside indeed. So the impulses are quick and fast, as you can see. Consolidations take a long time. So now that we've had a quick impulse and we've reached that target, I'm expecting one of those red zones again. If we do get one of those red zones, then we could expect again a breakout. If we get a very quick down move, then and a shallow upside, then it would probably be a bigger reversal. So that's why I'm in a wait and see mode at the moment. Let me check one thing. Now, things do change. If we do break above this orange trend line and this 50-minute fractal, there could definitely still be 30, 40 pips to the upside. That could definitely happen. It could. I mean, this is 109.75 when we break, and it could go to 110. This is 25 pips. So if the stop loss is somewhere, if you use the moving averages here as the stop loss placement, it depends how big the stop loss is. If it's 25, it's still a one-to-one. The other way would be to trail stop, just in case it does poke through the 110 and goes to 110.25, for example. Then if you trail stop it, you get those additional pips. So that's a break above the oranges, above these fractals here. So that's that. Let's take a look at pound. Euro is right at the 50-minute fractal. So let's see. Pound dollar is moving down as well. This is a lot of trend lines here because it's quite choppy price action at the moment. One could do something like this and like this. There are a lot of triangle possibilities here. So what does that all mean? Let me make it a bit clearer. Looks like the triangle, the smaller triangle, this orange triangle, is broken to the downside at the moment. But we still have a support line here coming in that could give reason to bounce. So there's not much space to the downside. The break here was better because there was still space to fall down to the black trend line, just like basically the euro dollar could have. But now, right here, there's just a very small space, and we could see a bounce. Or we see a bounce and then break. If it does, then this uptrend is toast. Of course, there's already some doubt whether the uptrend isn't toast already, but you can see there's still a potential trend channel that we definitely could put on the chart. Look at that trend channel there, the black lines for the top and bottom of the trend channel. Obviously, we had a strong momentum down and a weak side, relatively shallow upside here. And then again, a strong down and a shallow upside, I'm not saying. And then they break down. So, but all in all, it's still kind of within a triangle formation here. So for a real strong, consistent reversal or bigger downside potential, we really need to break out of that uptrend channel, out of this triangle, either down or up, to have a good idea what breakout trade is better. But that's how I look at it, at least. So, sorry, I'm hungry. I took a piece of chocolate. So basically, from a bigger perspective, that uptrend channel is part of the break, in fact, that happened. We had a strong impulse here. We had a bull flag here. Break, pull back, continue. So that channel is part of the breakout above that purple weekly trend line there. Okay. So is that breakout finished, or will it continue? That's the question. If it does break out, we have a very strong resistance, of course, here, but also here, which is a weekly, monthly top at around 167.30. Obviously, any breakout of the uptrend channel could see a fall down to, for example, this broken trend line. And maybe then if that breaks, we could see a fall all the way to this support level, if that happens. If that breaks, we can see a fall, well, maybe to these supports and eventually to this bottom of the triangle, right? But that's of very, very late concern. For the moment, all we really care about is whether we bounce or break at the bottom of this trend channel. If we break, we know there could be a move down to this level. If we bounce, then we know that there's a potential to move up to magenta. If we break magenta, there's a potential to move up to the red resistances. And then probably down again, a bit at least. So that's the bigger picture, in my opinion. One thing we can add, by the way, is a fib from here to here. And we can see that the currency stopped at a 23.6 fib. That is a very shallow retracement. And the target is minus 272, which is at 166.48. We only reached, well, 166. Basically, from a daily perspective, it's quite close. But I was expecting, when we were making this upside here, to be honest, I did expect a bit higher move up, closer to the 166.50. We never got there. But, it's from a daily perspective, it's close enough, I would say. So maybe that minus 272 target is taken out. Maybe not. And maybe we still need to go up and tag that minus 272 target. So that's the question. If the pound, if this is a 236, there is a potential for the pound to go even to the minus 618, but not always. So we'll have to see. Those are the two targets, though. One has been very closely hit. The other one is, of course, way above resistance. But if we were to break above this 272 target and this 167.30 resistance, then we know what the next target is. Doesn't have to go there, though. So let's move on maybe to the dollar yen. Let's take a look at the hourly. Wow, this supply demand zone, as I said yesterday, those could be tricky things and difficult things if you use those zones in the opposite direction of the trend, because then the trend can push through it. I am not really interested in the dollar yen today. I don't like its shape, structure, movement so far. I do see a huge bullish daily, weekly, monthly trend. What I do see is a 4-hour strong down move and a strong hourly move up again. So what I don't like is the disharmony between the 1 hour and the 4 hour. You know, this is a very strong rebound, but what do we do now? This is tremendous downside. I mean, considering the uptrend, we broke out of the uptrend channel, these black trend lines here. So obviously we're out of that uptrend channel. And there's a potential to correct deeper, for example, to the 38.2 fib of the entire up move. With this break, I did think that we could get there. We missed it, which means to me that there's a potential still to fall to that target and then continue with the massive uptrend up to 110. So for me, this upside, recent upside, could be just a bounce for more downside. In any case, even if that is not so, we are approaching tops and resistance. I don't like going long right in front of that while we have the potential to hook back even if we then move up. So I'm not interested, although I'm a super bull. I mean, I'm really bullish on dollar yen from a long-term perspective, from the daily, weekly, monthly. Obviously, there's no reason to think otherwise. The facts confirm it if we just look at the charts. But at the moment, I'm only bullish or want to trade it, let me say it this way, off of the 38.2 here to the upside. Or if we get a triangle formation here, like this, then I'm willing to take the breakout to the upside. Or if we push above this resistance level, keep pushing, and then we make some kind of bull flag correction here, then I also gladly take it upon the break. So that's what I'm looking for before going long, in my opinion, on the dollar yen. Do I want to go short? No, because this momentum can still push and push and push, and I'm not really interested in anticipating a potential retracement to the 38.2. Let's take a look at the 15 minutes. One way of measuring is maybe, a trend line like that, but really I'm not interested in it. But obviously from a 15-minute point of view, we are a strong uptrend. There is some divergence between these tops. So what that means is if we break above magenta or above it or below it, I guess that could be an indication of either of the two from an intraday perspective. But I rather hunt for different currency pair at the moment. I don't trust the upside because of the 15-minute divergence. I don't trust the downside either as yet, although I do think it has a good chance of getting to the 38.2. One of the reasons why I don't like the downside is also because if you look at the moving averages, everything is bullish, so there's no alignment to the downside here. And I like to have the 50-minute chart momentum on my side. I don't like to take trades, counter that momentum, unless I really have a very, very, there are a few occasions I do that, but I'd rather not. Because often enough I've experienced that when a 50-minute trend can push further through or longer than certain key levels that I might identify. I mean, those key levels can work pretty well too, but I prefer trading with the 50-minute momentum, basically. So let's see if this particular break, the 50 momentum is obviously up. So a break of this level, 104.42, would constitute the breakout to the upside, and could be a breakout trade to the upside. It could. But from a discretionary point of view, I don't think it has much to go because of the other things I mentioned, divergence and a big strong down move, etc. So that's, I guess, the majors. Anyone else? Which one do you want to continue with today? Let me take a look. I had a list. Maybe the Aussie we can take a look at, right? The Aussie, I was looking for a breakout to the upside. In fact, that was on my watch list yesterday, but it didn't happen here. We pushed through the long-term moving averages, and in fact, I didn't do it, but you could have had almost a close in, instead of looking for upside, when we pushed through the long-term moving averages and hooked back and found the green band as resistance. Look at that equilibrium, right? The green band is support twice in this kind of a bull flag pattern, right? But we don't get the push up, which I was looking for. I was looking for a breakout to the upside, but we actually get a push through support, and then we use that same support, the same green moving averages as a resistance, and when that happens, there's actually a potential to short it right in here upon the break of that bottom, and that's doing pretty well. I didn't do that, but definitely potential, and it's still falling, in fact. And boy, oh boy, it's falling a lot. And it's funny because it definitely looked very bullish, and it definitely looked like a hook back, but it just kept falling. So it looks strange in a way because it's like this mountain. A bit weird. That particular move up did happen after some struggle here of the downside, and we had already a breakout here and a hook back, and again a breakout. So it was looking more bullish, but also there was a bigger 38.2 fib. I thought that price could go there, but that's the good thing about waiting for confirmation. I was waiting for the price to go above orange for the breakout up to the 38.2, and because it never happened, no harm or loss, right? Even though I had a bullish view, I didn't lose money. I think, or didn't take the trade. I think that is a good thing. That's why I like to wait for confirmations. Of course, even if you get the confirmation, obviously that's not a guarantee for a win, but it helps myself with, once I get a confirmation, I feel like I am following my trading plan, and I don't feel like I have done, that's part of trading. You have to also be willing to accept the loss, obviously, to make profit. There's no other way. If you can't accept the losses, then it's going to be very difficult to make profit at the end. So, but that's why I like confirmations, because even though I have maybe bullish, bearish view, by waiting for confirmation, I'm executing my trading plan, but I'm also kind of it's not I can never blame myself if I follow that plan, because that's my plan, right? So that you want to always basically focus on the trading plan and executing it. And if you have a view and trade that view, then you can blame yourself for trading something that never materialized. That's kind of what I try to say. It's difficult for me to explain what I mean, but that's why I like the confirmation. In any case, we didn't get to 38.2, so what is happening here? I wonder. In fact, maybe we had this fib on yesterday. I put on the big one, in fact. So maybe that fib is still valid. It's 786 here. Apparently, it could be a bigger retrace. But obviously, we still have this support line here. I wouldn't be looking to short it right here. We're too close to support. Either there's a small downside trade maybe upon the break of the magenta, but I would only trade it when we get a bit of a bounce here and then break. If we continue to break in one shot, I wouldn't attempt it, because it already has moved down so much that a bounce at one point or another is a decent probability. So either it bounces and then breaks, okay, fine. Or if it breaks, I'm not interested. If it does break this bottom and then makes a small bear flag on this smaller time frame, I'm definitely interested in taking a short. So that's the downside scenario. If we do bounce here, but we bounce bigger than we expect, then I would like to see a triangle, and then I would take the break either way. So as you can see, any upside trade would require a triangle, in my opinion, or a strong close in reverse and then a bull flag, and then I take the next break up. Downside, I would require first a retracement or a break of this bottom and then a bull flag, bear flag, excuse me. So I'm not interested in Yazi at the moment, basically, because of how it has extended to the downside. Alrighty. And if I would be behind the charts, I think that there was a pretty good break of this zone. That was a good break as well, but that happened during my night. Not sure if anyone took that trade, but that was nice. So obviously support is cracked, and there's still good space to fall towards support. So that was a nice trade there, if you see what I mean. Anyhow, that's the past. At the moment, I'm not interested. Kiwi. You see, that's why I was careful yesterday. I said I don't trust this entire zone. Let's see yesterday here. Okay, it's still pushed up a bit, indeed. But it did eventually did find resistance. It pushed up though another 30 pips, 40 maybe. But then did find that resistance I was talking about from the daily point of view, right? We're here at resistance. And we ended up with a wick on the daily candle yesterday. So I don't know what the Kiwi is doing, but it's just, I don't like this, quite messy. Not interested. So once again, if you have a particular pair, I guess we'll bump into it one time or another, but if you have something that you want to look now, let me know. Dollar Swissy actually had this trend line. I was looking for a break to the upside. When did that happen? To be honest, that happened yesterday. I didn't see that happen. It was on my watch list, but I somehow missed that. That's weird. Oh, no, I didn't miss it. I remember. Now I remember. Sorry. I didn't like this break. It looked very choppy, and I skipped it because of that. But I was thinking that this could be a break. I was waiting, hesitating. Then eventually took the dollar CAD and the pound CAD. I liked more, but now I remember. But we did, in retrospect, we did get a break, pull back, and it did continue. It still is. What about now? Well, we've continued up and up and up and up. Let's see. Yeah. The thing is that, when you have a good break like this, well, not good, but the break, I shouldn't say good because I didn't find it good, but when you have a break like this, that's a better moment in any case than going long right here. That's what I wanted to say. Because obviously, what is the next resistance level at 90.90, and we're now at 90.76. So right? Obviously, the reward is small, the potential reward, it's only 14 pip target. What is our risk? Well, it depends on where we put the stop loss, but obviously, if we use a natural support or resistance like this 50-minute fractal, it's already a 30 pipper, 35, so there is no reward to risk, in my opinion. Not on this 50-minute chart. Maybe if you trade the 1-minute chart or 5, even then you can see this is a strong impulse, probably make a bit of a correction now. So no, not. Let's move on. XAUSD, let's do that. Looks quite choppy to me. Still the same zone, 1250 to 1270, that I think is important. We're not able to push that through. Yesterday, what happened yesterday? Not much, did it? Actually fell, hooked back, and fell again. Okay. So looks like we're at a potential trend line here. If we break magenta, there could be a reason to fall down to purple, for example. Upside, at the moment, I don't see any upside potential, to be honest, because although the moving averages, price is about halfway those moving averages, but I would need to see price above the black band like it was here. Then there could be some space to the upside. So what we need is an impulse up and then the next break. If we do break above these tops, 1250, then there could be some small trade up to 1270. If we break 1270, as I said, up to 1300, then up to 1325, then up to 1360, then up to 1420, then up to 1500. Those are the zones, I think, up the upside. The downside, upon the break of magenta, I would say down to purple, and that's still a bit risky because it's counter trend to 4 hours still though. So be careful of that. That one's riskier. But the break of purple should see some downside to challenge these bottoms. So it's kind of an awkward situation where we don't have really where we had an uptrend, or we still have prices moving down. So it's not a good situation to go short or long, I think. So yeah, seems to be the message of today at the moment. Sorry about that. Although there is a potential for break of magenta, it could be a counter trend breakout trade. So if those, if I would take those always with a bit smaller risk personally if I market something as counter trend. Okay, see the 15 momentum is down, right? When we had this big impulse bar here, and then we got this correction, right? Then a break of that was already a 50-minute breakout, and now we're getting the potential 1-hour breakout. Let's see, pound. Maybe we can take a look at the pound yen. That too, very funny, very strong downside, weak correction, strong downside. Now getting a very strong bounce, like a V-Valley bounce. We missed the minus 618 there. Let's see. break of purple, maybe a potential for a small move up to magenta, a break of magenta. There could be more potential to move up again up to the resistance. It's like the dollar yen a bit. I don't like this one. I would rather wait for either a break after maybe a triangle to either way. Euro yen probably looks the same. Yeah, Euro yen looks the same as well. Here maybe looking for a trend line like this potential, even a trend line like that. So two trend lines potentials here. A break above that would be this. At the moment, let's take a look, 50-minute chart. I have a fib on. Did we talk about this yesterday? I'm not sure. Oh, I think we said, didn't I? I think I said that this has a chance of going to the minus 618, which could be a resistance, right? Yes. Well, part of it was true. It did move up to the minus 618, but it certainly didn't stop at the minus 618. So you can see how important it is sometimes to wait for confirmation, even though I thought that would be an important level. It still accelerated further up to the next resistance, in fact, more or less. So you can see how important that is. So part of it was true. The other one that you can see just blasted through that level. So, and we got a bigger retracement indeed, like that. So that's the 15. Let me. We are now pushing through this impulsive line, but that's very impulsive. It's a very steep trend line, and you can see we're making kind of a bull flag. So I wouldn't consider that as important, just that you know. That's why I'm taking it off. Let me put a different template now on. Yeah, I think upside basically I would be looking for a break roughly above this trend line. You know, to be precise, I think that fractal like that, the 142.50 probably would be good to break. At the moment, you can see that the 15-minute world is in the uptrend. It was an uptrend ever since, in my opinion, ever since. Well, it depends how you define the trend. If you use this band, it was an uptrend ever since here, but that's sometimes early. If you use the longer-term band, then the uptrend is ever since this blue dot, right? So if you use that as a guideline, now we're partly in a downtrend, partly in an uptrend. That's why I want both to be aligned. That's probably here or here. But it's interesting, though, you can see that, and this happens more often, when we break the one set of moving averages, we sometimes go to the next, right? So that could happen here too, but that's a counter trend move. So let's see if we can push above that green line. That would make it interesting. Funny enough, all these, the euro odd has the same, so it's really funny how the odd and yen weakness are traveling kind of at the same rate here too, just like the euro yen. We had downside, corrective upside, downside, now strong upside. So same scenario, in fact. Here too, we're in an uptrend on the 15 and the 1 hour. In the meantime, probably. The 4 hour is a bit of a difficult one. Why is that? Well, at a 15, we still have a clear top in here. So our V valley, or basically, right, down and up, has done what for us? Well, it has brought price right up to this resistance. Technically, this is still making lower lows and lower highs. So what could this be? This could still be a lower high. And we're right in front of that resistance, so I wouldn't be interested in longs that close to resistance. I'm not interested in shorts because there's too much momentum to the upside at the moment. But if anything, if I had to choose, I would rather short it probably than go long. But I would still rather wait. Personally, I'm waiting either for a bigger pullback and then break, or a break and then a bull flag and then break again, or a reversal bull bear flag and then break. Sorry if this message it just is coincidence that they all roughly at the same spot. Shame. The euro dollar did push down. So yeah, 136.15. It went to 136.19. That could be a bouncing spot already, but I wouldn't want to risk there personally, because it could also easily go to the 786 potential. Looks like, let me take a look at the 5. You know, this could easily be, yeah, I would be more tempted to see a bit more downside, but let's see. This could be a hook back for more. Then again, there's also divergence here, so that's always a bit difficult with 15. Dollar CAD. Dollar CAD is moving up again, yeah. Good. Yeah, so there's definitely potential to get closer to that 110. You know, it's difficult to predict. There could be a strong reaction at 109.94. It could go to 110.10. That's that. You know, but the in general though, the closer it gets, the more vulnerable the currency pair is to a rejection at around that level. Obviously, when it was at 109.40, there was less risk. That's all. But yeah, there's still potential indeed. Euro dollar. Yeah. So basically, breaking to the downside, I could see some follow through. The 618 or 786 could be bouncing spots for upside, although I think the 786 would seem more likely. I don't think 618 will be it, but let's see. There is a downside momentum here on the 50-minute chart, so that could see follow through. That's why, as I said, in general, not a big fan of going against the 50-minute momentum, because sometimes it could kind of push through further than our bigger time frame analysis kind of predicts. So that's why it's always good if you do something like that to take smaller risks. Let's see, anything else? Pound New Zealand. Oh, Pound New Zealand actually reversed yesterday. Continued to go up. This was in my evening, so I didn't check it this morning yet, but it actually broke. It broke here, this trend line. I had some hesitations about it a bit, indeed, because of the divergence. It's a pity. I was still thinking maybe one more push down. Never happened though, and actually reversed higher. Interesting. Interesting. So what's the 15 saying? Let's take a look. 15 is a bit of a mix, as we can see. Moving average red, other are green. I want to see something aligned, so that means either a break above here, or probably we're going to need a break below here, I would say. Or otherwise a break below here, probably. Yeah, dollar index, certainly. Good idea, actually. I will take a look at the Camarilla, maybe. Actually, I forgot about that. Quite messy, isn't it, the last 2 months? I mean, this was at least a clear downside. This was a clear upside. This was maybe could have been considered a retracement still. And we did get a break, but this has been also quite, in a way, quite choppy so far. But in a way, this could have been a triangle and a break, hook back, and go. If that is indeed a break, pull back, and go, we would eventually break above the next purple line. Let me make that a bit different. Magenta and above resistance. So that would be a breakup potential there, I guess. Up to, let's take a look at the weekly, up to already. Up to, for example, this weekly trend line here on the weekly chart, right? So that could be a breakout up to that top of that triangle. So these are all smaller triangles, basically. We have a bigger triangle there. The weekly chart, we also have a bigger triangle here and a bigger triangle line here. So we're definitely relatively stuck in triangles, as you can see. Either a break above magenta, this lower time for magenta and red, up to there, maybe then up to there later on, or do we break like that? This is quite choppy, so, but it still has a bit more, I would say, still a bit more uptrend momentum because of the from a one monthly perspective maybe, or weekly perspective even. Why? Because it still has these higher highs here and higher lows, this slant to it, and it's coming from upside here. So this could be a bouncing spot because of that. Right? We still have this in play. And yeah, therefore we are pretty close to potential support, I guess. But it's moving quite slowly. Uh, one more thing I wanted to show you, which was, now I forgot. Oh yeah, the Camarilla. So this is the euro dollar. We actually just hit L5. Funny. So seems to be pretty deep territory, according to the Camarilla. I didn't expect it to be L5. I thought maybe it could be L4, I thought. So that's a bit of a warning that maybe shorts are also dangerous if we're at L5. It's already a pretty far pivot point, so that could be a bit of a danger there. There's an S3 though at 136. The upside breakout is at the H4 all the way to 137. Let's see, the pound actually has an L4, or just touched an L4 here, now hooking back, so that could be resistance right here with the L3 level. Maybe this was just, this could be tagged the L4, so maybe this is a pullback, and now we'll fall to L5. L5 is at 163.40. H4 is above 164.90. So those are the Camarilla levels. And just in case you don't have that indicator, well, folks, I guess we'll be rounding up sooner or later. Is there any questions maybe you have for me? I think that I've gone through the pairs that I normally look at. Do you want to look at something more exotic, maybe like an odd cat or something? It's not something I really keep an eye on that much. So, I mean, occasionally, yes, but if there are no questions, I don't want to hold you necessarily any longer. Let's take a look at this template maybe. You can see your dollar has red candles there. Here too. Bit of a mixture there, I guess. Today, I've not really have a clear vision as yet. Let's take a look. Difficult. Yeah, it's I can't say at the moment, to be honest. It's I wish I knew, but all of them are looking in a spot that I'm not interested at the moment. So it depends on how it really develops. If we, let's say the euro odd makes a strong fall here, for example, and that makes a bear flag, then I'll gladly take it to the upside, downside, sorry, for example. Or even if it were to make a bigger retracement, for example, like this, but then bounce, right, and then a break, then I would even take it to the upside. What all I want to see, though, is because now it has moved up so much and it's so close to resistance that it's not an interesting spot for me. Either I need a bit of a retracement and then a break up, fine, or a stronger reversal, correction, and down again. I want basically the currency to reset itself to a position that I know that if I trade it either way, there's some momentum to follow up with it. So that's what I would be looking at. Whatever pair has that, then that would be interesting. Michael's asking about gold. Let's take a look again. We did take a look, but no problem. We said that basically gold is a bit not the ideal position, but generally speaking, though, a break of this magenta line could see a counter move down to the purple, for example. Could be a breakout trade, counter trend breakout trade. A break of the purple could see some fall to challenge these bottoms. A break above red, then we have to zoom out to the 4-hour break above red. We could move up to the next red one, although that's quite close. The better trade would be above this red. We have the green circle. Then we could see a continuation of the uptrend. So yes, we are out of the downtrend channel, but we're definitely still in front of this resistance. So that's the tricky part about it. We were in a downtrend, but we broke, making now a potential uptrend, but we're bumping into resistance, and we don't know, is the trend strong enough to push through it, or is that resistance strong enough to push this down again? Björn is saying, is the average win of a trade on 30 to 35 pips too small? Will stop loss eat up in the long run? Well, that's really depends on your expected profits. It's always that balance, isn't it? And then, of course, how many times do you win? I mean, you could have an expected profit of 60 pips, but if you only manage to hit those 60 pips in 2 out of 10 times, then that's not profitable either. So, you know, it depends on your system and your strategy balance, really. I don't know how you trade as well, so it's really difficult for me to say. You know, on average, if you're gaining 30 to 35 pips and risking 18, then you need to be right once to compensate 2 losses. So that would probably work out in most times, depending on how you trade. It is possible, though, to aim for what I like about what I use for 50-minute world more and more, and I think I'll be only using that maybe eventually, but is trail stopping the 50-minute world. What I like about it is the fact that it allows for big winners and it cuts my losses short. And it allows for big winners. So, you know, that's one of the advantages of having a trail stop on the trail stopping the 50-minute fractals, is because, you know, you're not necessarily cutting your winners at 30 to 35, but if they go up for 100 pip, you know, that's a big profit on the 50-minute world. So if you have a couple of those a month, then of course that does very good for your equity curve. Of course, the equity curve will be more choppier in the sense that because you're trail stopping it, you might have smaller wins and then a bigger win, but it allows for that bigger run once in a while. Of course, if you aim for 30 to 35, you'll never have that. So that's the thing. Or you might do a combination. If you depending on your trading psychology, if you feel uncomfortable with the trailing stop, then you could use, for example, a TP to lock in some profit and let the rest run. If for me, I like trailing stop, works very well with trading psychology. I've noticed even better than TPs. The reason why is that although I have a certain level in mind, I always get a bit up, a bit more nervous if we get closer to the TP. Everyone has their own weakness. That's my weakness. I don't have problems if I'm down, if I'm up a little, even if I'm up a decent amount. But if I get close to my TP, really, really close, then I get antsy and I tend to be more nervous and maybe sometimes click it out. So by moving just like prior to it, of course I know that only the difference is sometimes small, but still. By trail stopping it, I basically feel pretty good because I know that I locked in some profit or I've reduced the risk and I have more patience. So tomorrow we'll be back with fibs. Tonight, Toronto will be talking about those momentum bursts in the Forex markets. Take a look at that if you want. Adrian is asking if I use CCI with AO. Yes, sometimes. I don't have it standard on the charts, but as you can see from my trading, I like to take things off and on again. I guess I wasn't like that in the past, but I do like that because it keeps me sharp. It keeps me focused on new information. By forcing myself to remove indicators and tools and adding them again, I kind of make sure that I look things as objectively and as fresh as possible. If I keep things on too long, then I tend to maybe keep focused on old things too much. But I don't have CCI as standard, but I do like to look at it once in a while. I've especially gained interest after Toronto. I don't have a big experience with it. I especially gained interest after Toronto explained it in his webinar. So my primary tool is AO, but I see CCI as something that I would like to gain more knowledge in, and it seems to be interesting to me. So I use it occasionally since then. All right, folks, I guess, so if you have any questions regarding time factor, I would love to see them once again, anytime, and we'll be back tomorrow with this live webinar, same time, same place, and thanks for being here and wish you all great trading.
The organizer has